Welcome to Financial Management, the Basics. My name is Otto Spranger. I am the treasurer of the Global Allergy and Airways Patient Platform and one of the two founders of GAAPP. I want to start with the Constitution. The importance of the Constitution should not be underestimated. It influences the entire financial management, as organizations are subject to different tax regulations. There are different kinds of organizations. Types of non-profit organizations are voluntary associations, foundations, and other forms. And the form of the Constitution also defines the tax or the non-tax status in many countries. Non-for-profit organizations are tax exempt almost everywhere. It is therefore very important to be well informed about this. In some countries, members of the board are liable not only with the association's assets, but also with their personal assets. Financial management differs significantly between non-profit and profit organizations. Profit organizations are subject to taxation and require double entry bookkeeping, while non-profit organizations only require single entry bookkeeping. The next very important step is the bank account. Negotiate with the bank you have chosen reduced fee as a patient organization, so you can save money. In times of negative interest rates that we have seen almost everywhere, banks have been charging custodial fees depending on the amount of money in the account, and they are up to 0.5%. Here, one should spread the money over several accounts at different banks to be on the secure side. Careful evaluation and planning. The basis of an organization's financial management is the budget. The budget is, in my opinion, one of the most important things. It's the comparison of all inputs and outputs expected in the next financial year. Planning is half the battle. You need to know what you want to do, and then create your budget according to your planning. My financial plan for the next 2 to 3 years would be very good. A plan regarding investments. Is a bigger office needed? Do you need to improve your IT equipment? Do you need roll-ups or promotion materials? Are you planning events? Do you want to employ a staff member? And then liquidity planning. When will most of the membership fees come in? Is it in the first quarter of the year or more in the third? When to expect payments from sponsors? So in which quarters is there little money, and in which quarters is there more money available? I would like to deal with the budget and budget planning in great detail, as this is very often neglected. Why do we need a budget? An organization has needs, wishes, and also the needs of reserves. So why a budget? A budget is a roadmap for your organization. The budget is a short-term plan And it must be very flexible and changeable due to unexpectedly things coming up. It's the basis and the control element for the entire financial management of the organization. And it provides a framework, also authorization and orientation for all decisions in the organization. The principles of a budget are very simple. It has to be complete. All income and expenditure must be recorded. It has to be accurate. So a realistic estimation of income and expenditure is very important. And it has to be clearly communicated to all members of the board and the staff, voluntary or employed. This is not only a topic for the inner circle of the board. Yeah, you are all sitting in the same boat and have to row together in the same direction to be successful. The purpose of a budget is to control the resources, to communicate the plans to the staff members, and to motivate the whole team to work hard to achieve the budget goals, to evaluate the performance of the organization, to provide visibility of the performance, and also it's necessary for accountability. So what's the structure of a budget? You have an idealistic area, like membership fees, donations, grant from the city, admission fees, inheritances, gifts. Then you have the asset management, there's interests, dividends, income from maybe long-term rentals, granting of advertising rights, and income from asset management. Further special purpose operations like entrance fees, proceeds from sale of programs, participation fees, and economic business operation, sponsorship income, advertising income, sale of promotion materials, whatever. In general, you have revenues like membership fees, entrance fees, grants from various companies, donations, event fees, income from capital assets, or other contributions. And on the other hand, you have expenditures for administration of the organization, office expenses, salaries, for the purchase of goods, advertising, interest, and maintenance. There are three phases of planning. Before the financial year, make your plans for the upcoming year and plan the budget. During the year, make every month or at least every 3 months a target versus actual comparison, that you know where you are. And after the year comes the analysis and the control to improve your planning. The next point is very, very important. Be disaster proof. Be rather cautious. I really say be very cautious and not too optimistic in your expenditure calculations. You don't know what might come. Think of COVID. Nobody expected it. Think about building financial reserves. Sorry. The larger your income base, the greater is your economic and financial independence. And the benefit, there is less influence by third parties, by your sponsors, because sponsors always have interests. Yeah? And the more money you have, the better is the liquidity. So you have better chances of survival in the event of a crisis. Let's talk about bookkeeping. It's the recording of financial transactions on a day-to-day basis and keeps individual financial transactions accurate and up to date. So I want to make it more practical. You have income and expenditures. Here you see a very simple Excel file. You need a sequence number, the date. You can create a booking code or even give a text. You have the bank statement number. So what was the expenditure or the income, the amount of money. So here you see sequence number 1 on the 2nd of January. You can create a booking code, for instance, for postal services. Here it is 4. It's bank statement number 1. And the payment was 16.80 euros. On 3rd of January, membership fee was paid by this person, 25 euros. Also on the 3rd of January, you can create a booking code for membership. Here it is 10, bank statement number 2, the name of the person, and here you have the 25 euros. Here you see you have a donation on the 5th of January from a family with 420 euros. And here you see some expenditures on 8th of January for telecom, 18 euros 48, for a trainer honorarium, 300 euros, bank fees. So you can very easily here sum up income and expenditure. This is normally fulfills all the criteria for good bookkeeping for smaller organizations. Cash flow. What's cash flow? It is the detail of cash received and cash expended. You should do this for each month of the year or minimum every quarter. Here you see cash flow from January to March 31. Cash received 9,764.11 euros. Cash expended 3,874. You see you have a positive cash flow received minus expenditures 5,889, and the bank account at this time you have a plus of 27,000 euros. So your organization is in good shape. You have a positive cash flow, more income than expenditures. The cash flow helps you to determine if the company is on a positive side or on the negative side. in the event of a negative cash flow, you must revise your business plan to solve the problem. Otherwise, you are running into problems. Balance sheet at the end of the year. Need a balance sheet, but a detailed report of the financial situation of your business. The balance sheet includes all the assets, all the liabilities, and the capital of your business. So what I really want that you do, and be careful with this, keep your records always organized. Track your expenses. React very quickly to negative financial developments sooner rather than later to avoid major problems. Think about building reserves. Hope is good, but maybe there is not more money coming in. You have more expenditures than income. So build reserves. Stay flexible in your plans. Change your plans if it is not possible to do this, what you have planned maybe for the second half of the year. So cancel some projects to save money. In that way, I wish you all the best and thank you very much.